I'm Rick Keeler. Thanks for joining me. Well, is it reasonable to think that the economy's on the upswing? After all, by one stock market rule of thumb, a new bull market started on March 26th when the Dow shot up over the magical 20% mark from the bottom in just 3 days. The bear market, which happens when there's a 20% move downward from the high, lasted a total of 11 days. The stock market is now up over 40% from the bottom. Yet investors might be wiser to think of this as the eye of the hurricane. This is the view of Rick Edelman, founder of Edelman Financial Engines. In an interview with Karen Detmasters, which was published in the Financial Advisor magazine on June 26, 2020, Edelman said, "The worst is not over, and more bad economic times are probably coming, despite the current upsurge in the market." He noted that those who expect to return to life before COVID are destined for disappointment. He said until a vaccine is widely distributed, the economy is not likely to fully recover. I would add that even when a vaccine is developed, it will not be widely distributed for 6 to 12 months. People will not resume their pre-COVID spending behaviors overnight. It could take years. Things are not looking good for the economy. 40 million people filed for unemployment from March 1st to May 29th. Even with the stunning addition of 4.8 million jobs in June, the Department of Labor still puts the unemployment rate at 11%, which is the highest since the Great Depression. According to the Congressional Budget Office, almost a quarter of Americans increased their credit card debt as a result of the pandemic. In April, 31% of renters and about 7% of homeowners didn't make their housing payments. The commercial vacancy rate is 17%, the highest since 1991. And with many employees likely to continue working from home, the prospect of a recovery in that sector anytime soon is dim. If you're an investor, don't let the recent market uptick lull you into a sense of false security. It's important to prepare yourself emotionally for the possibility of a worsening economy and possibly another steep downturn in the stock market. First, be sure that your emergency reserves are topped up. If you're retired and withdrawing from your portfolio, it's really wise to have 2 or more years in a money market, savings, or checking account. Don't view this as an investment. It's not. View it as insurance. This reserve means you won't have to tap your portfolio for living expenses when it's just suffered a huge drop in value. Next, if you couldn't stand watching your portfolio drop by 50%, make sure it's not heavily invested in stocks. One of my favorite well-diversified portfolios only has 30% in stocks, and maybe only half of that is in U.S. stocks. While the return from the portfolio is about half that of stocks, so is the volatility. Most people don't need to get the same return as stocks to live well in retirement. Next, invest in updated technology so you can virtually stay in contact with friends and loved ones, attend virtual gatherings, and partake in telemedicine appointments. And finally, take precautions against the coronavirus, in part because a physical crisis can destroy your financial and emotional well-being. I followed the agonizing stories of 65 people who came down with COVID-19. This was from a conference that I attended in New York City on March 7th, where I spoke. It was attended by about 1,100 people. 100 to 200 of them came down with COVID, and I was on a listserv with several hundred of those, where 65 people came down with the coronavirus. What I found out is that the virus is often exponentially worse than a bad case of the flu. If all a person has is something equal to a bad case of the flu, they were fortunate. And this thing can do permanent damage to various parts of a person's body. That goes on well after the infection. So don't minimize this virus. Practice the 3 W's when you go out. Wear a mask, wash your hands, and wait 6 feet apart. Finally, follow the classic advice to think long term. We will get through the pandemic. The economy will recover. Both, however, are going to take some time. Thanks for listening.